Hey, good morning, everybody. Welcome to the first full week of April. And it's hard to believe that the second quarter's off to seems to be a pretty decent start on the marketplace. Hey, before we get started with Dave, I do want to remind you that we are giving away a free report on the Social Security Decision Guide, as we call it. All you have to do to get it is text the word security to 863-285-3815. That's right. Just text the word security to 863-285-3815 to get your free decision-making report when it comes to Social Security. Dave will be with us in just a minute.
8:40 now. It's 20 before 9. Let's find out what's going on with your money. We've been waiting all week for the economic reports coming out this morning. And I think we got some good news. Downtown Sebring, we head to the office of Statler Financial Services. Phillip Statler is there. Phillip, good morning. How do?
Good morning, Dave. Hey, we did have some good news come out. It was day for jobs to come out from the government numbers, and so we did. The March numbers came in at 196,000 gain jobs this the month of March, and then they went back and looked at January. They revised, but not much. It basically came in at 312,000. They did revise, if you remember, February was a huge disappointment. It came in like 20,000 new jobs. Well,
that was one of those jump off the bridge numbers in February, wasn't it?
Yeah, it really was. And they've revised that number up another 13,000. So it came in at 33,000. Still not a good number. But looking at this month of March, 196, that is a beat no matter whose numbers you look at. If you look at Market Watches, they had, I think, 172,000 new jobs. If you look at street.com, which is where I usually pull my numbers from, they were at 184,000 new jobs. Either case, the 196,000 is definitely a bigger gain than expected.
Always happy to hear good news for a change. It also means that the unemployment rate stays steady at 3.8%, which I think you and I kind of are in agreement. I'm not sure mechanically this economy can get below that. That's about the percentage of people that are changing jobs just with the normal sifting and winnowing process, isn't it?
Well, yeah, it is. And so it's not, I just don't see how I can really get much lower than 3.8.
I'm kind of in the same boat. We had a slight wage increase, 0.1% last month. I don't know whether that was a surprise or if anybody's expecting it. And the average work week increased 0.1 of an hour to 34.5 hours a week. Every indication is that the economy is pretty much at full employment. And like we've been saying over and over again, we aren't growing that fast, but we aren't shrinking either, are we?
No, we're not. And so that's another good sign, that things seem to be moving forward. But I still see these headlines that say, we need to be careful. We need to watch what we're doing because the other shoe's going to drop. Well, and we may see that, Dave, as we continue to head through earnings season to see how did the first quarter really do. We may have added jobs. Things may look good. But if the companies aren't meeting earnings expectations, then that's going to put some pressure on the markets.
Yeah, we had a former Federal Reserve chair that used the phrase irrational exuberance, which is always inadvisable, right?
Oh, definitely. Yeah. And you see that when we kind of get this point, it's kind of the fear of missing out. People get to that point and say, man, if this thing keeps going up, I'm going to miss these gains. And so they start throwing money in. And about the time they do, something bad happens and the market starts to tumble.
Yeah, fact of the matter is we amateurs do not have a good track record at timing the market, and that's always good advice to take. Look at it with a long view instead of a short one. Kind of interesting, though, this morning's data, the unemployment figure, was kind of a sigh of relief because we had Wednesday and Thursday's indications from ADP and from the federal government's first-time claim figures. They kind of disagreed. So now we're sitting here saying, okay, fine, we're on an even keel. Now we can start talking about what companies are actually earning and how that should be affecting their stocks, right?
Oh, that's right. Yep, absolutely. And then we're seeing some positives this morning on the indexes based on supposedly the trade talks with China are going well and we're getting close.
Yeah, it was a good day yesterday, and I'm glad to see green ink this morning. One black mark of the bunch was evidently it's kind of hard to sell overpriced underwear in this economy, huh?
Well, that seems to be the case. Duluth Holding Company came in. That's the holding company for Duluth Trading. You know, they run those nifty commercials on TV and have the ads about their you know, shirt tails hang down low enough that you don't have to worry about plumbers. So you know,
They
um,
aren't ads. They prompted me to look at the prices. I decided I really like the trousers, kind of like the shirts. It'll take an act of God to get me to buy their underwear, and evidently a lot of other people have been thinking the same thing, huh?
yeah, evidently, because they missed. They missed by 11 cents a share. Their revenue came in pretty shy of what the street had forecasted. They had a misalignment, is what they called it, of their inventory, which drove up their expenses for the quarter, and they still haven't come out of the sluggishness that they saw in the fourth quarter. So they're trading down almost 20% this morning.
Ooh, that doesn't help a bit. Any
No,
other indications we've got from other companies? I'm seeing a bunch of re-ratings and changes, but I didn't see a lot of household names on my listings this morning.
no. I see some, some upgrades and downgrades from different companies, but nothing that really is household names that you and I would recognize and products we use.
Okay, I do notice that the run up on the market over the past couple of days is making our bonds a little healthier market. A 2.37 number on the 3 month, 2.53 on the 10 year. They're starting to stack up in a more normal interest rate range. So we're not quite as worried about interest rate inversions, at least for the moment. And that's a good thing, probably because all of a sudden equities for the last few days have started looking better.
Yeah, they have, Dave. They are definitely, and they're making some bigger jumps this morning since we got the jobs number too. So we,
Glad.
yeah, so that's helping out today. The Dow's up 100 points right now, and the S&P 500's up 9.25. Nasdaq's down up 37 and three quarters. Gold's trading down a dollar an ounce, still below 13,000. Silver is up 4 cents. It's at $15.12 an ounce. And crude oil is still back up over 62, 62.21 a barrel right now.
Well, poop. I got mixed markets around the rest of the world. Asia came in with a mixed bag at the end of the day. Nobody moved very fast anywhere. Europe generally up this morning halfway through their trading day. Phillip, to straighten things out and get some solid advice as to what my financial future should look like, how can I get a hold of you on the phone?
Dave, they can give us a call at 382-0037. Follow us online at statlerfinancial.com and follow us on Facebook. Like our page there and keep up with us, Statler Financial Services, and then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. on Sunday mornings.
And online on newstalk730am.com, as well as on the radio at Newstalk 730. Phillip, thank you so much. You have a dynamite weekend, and we'll catch you Monday, all right?
All right, man. Thanks, Dave. You too. Great talking to you.
Thank you.
Hey, as we close out for the week today, I do want to remind you again that we're offering a free report on really how to make choices when it comes to your Social Security decision and the process that need to be made there. All you have to do is text the word security to 863-285-3815. That's right. It's that simple. Text the word security to 863-285-3815. Hey, I hope you have a great weekend. Thanks for tuning in.